Good morning to all traders and welcome to our brand new daily video Markets in Cycles, where we're going to be focusing only on Elliott waves and on the best opportunities that we have for the day. So without further ado, today I'm going to have a quick look on dollar yen, and then we're going to jump on the Dow Jones, gold, oil, and also Chevron. So on dollar again, we talked about that a bit like last week. We're looking at this opportunity as an impulse on the upside. I changed my view over here because I'm looking at this as a running flat now, right? And I'm expecting 1, 2, 3, 4, and 5. Either it's ended or maybe we can extend up to 1.7 before we start correcting lower for wave B. So the opportunity here for a reversal over here is quite big. However, we're still looking at a correction up in wave X, okay, in the intermediate degree. Now, the RSI and the MACD both give us signals that a correction, a pullback might indeed be in play. And once we get a confirmation signal, perhaps, as I said, we move higher or not, then we should be probably looking to connect our Fibonacci retracement tool down here, yeah, and look at a correction down to anywhere between the 38 and 61, perhaps even lower down, but I don't think that is going to be the case. Now on the US30 Dow Jones, guys, it looks like to me the impulse on the upside is done, yeah, because actually let me go a little bit further back out to the 4-hour chart. Since the move down here in wave 4, right, we've done an impulsive move on the upside 1, 2, 3, 4, and it looks like 5 is done, is in. Here's what I'm looking, yeah, if we connect the Fibonacci extension here to between 1 and 2, wave 3, it was done exactly at 1618, yeah, and then the rule of equality between waves 1 and 5 brings us up to the 3238, which is the 100 Fibonacci for wave 1 and 2, right? So waves 1 and wave 5 are equal, and wave 3 is extended 161% of waves 1 and 2. To me, this makes a very good opportunity, but I'll be waiting for this break, okay? Once we break, then probably is going to be a breakdown. In case, though, we do not break below that level, it's possible that we're going to extend a little bit higher to take out that level, or perhaps just to see an overthrown as well known. So I'm really looking at this level. Perhaps then, once we break, we're looking at 27.85 in the short term, and then a continuation to the downside. The other opportunity I wanted to look is gold, okay, also on the 4-hour chart. Gold, I've been expecting actually gold to turn a little bit higher up, to be on around 1764. However, we broke to fresh lows, okay? And then that, for many people, indicates that there's going to be a continuation lower down. Although it's possible, okay, here's what I'm debating. I'm debating these high volumes over here, okay? And that, to me, means that we could actually see this wave now coming in and being wave 1. We'll get 2, 3, 4, and 5 for a new high. The other thing, though, I was looking also is the fact that we missed the trend line in this ascending channel, and at the same time we missed, to the descending channel of the medium-term channel as well. If we break above 1760, it's very likely that we're going to continue higher. If we don't, it's a good indication that we might get another leg to the downside, where we're going to see perhaps prices moving below the 1700 and bouncing off at this trend line, yeah, on the channel, and then start moving higher. Okay, now the signals here on the RSI and the MACD are a bit biased to the upside. However, I wouldn't be surprised if that was just a short-term indication instead. Now, oil. Also on the 4-hour, I was looking at oil to get to around that level for a while, guys, right? So this is a multi-year channel, a descending channel, okay? And we've actually met this trend line after all this upside over here. Now, to me, this is an A, B, and a C, okay? So far, it's a double zigzag. So far, we've done 1, 2, 3, 4, and it looks like we've finished 5, because this is 1, 2, 3, 4, and 5. And this is an ending diagonal again. And what is the interesting thing with this particular upside in wave A is that if we take waves 1 and 2 in the moderate degree, we finished wave 3 at 1.5 Fibonacci extension, yes? And now the rule of equality again is respected. We ended wave 5 at the 2.5 for a nice extension, okay? Relative equality between wave 1 and 5. Now, what I'm waiting to see, similarly to Dow Jones, yeah, I'm expecting to see a break below this trend line of the ended diagonal. This can take us down to 54.17 at least, okay? And if we also pull our Fibonacci tool over here, you know, we could essentially get down to 48.75 or even 45.19, where I'm expecting wave B to end. And then after this pullback, I will be expecting again another move to the upside, yes, to complete wave C of this double zigzag C in X, and then continue all the way down in the longer term. And last, guys, Chevron, a very good opportunity in my opinion, particularly because it looks like we've done with wave 1 and 2, and now breaking to fresh highs seems to suggest to me that we're going to get an internal structure in the minute degree for waves 3, 4, and then 5. And that is going to be, obviously, you know, since we're 1 and 2, is going to be impulse wave 3 in the intermediate degree. After this standard correction over here, standard flat, yeah, regular flat, we break out to fresh highs and we correct. So I'm expecting this correction could actually take us a little bit lower, but I expect in any case then a move up to 115 and then to 135 for minor wave 3. Okay, so these signals are also supported, not massively, but somehow from the RSI on the MACD. So this will be for the first episode. Thank you very much for watching, guys. If you have any alternative scenario in mind, please do not hesitate to comment and I will get back to you as soon as I can. Thank you for watching and we'll speak again tomorrow.